Welcome to Tradepreuner's Alpha to Omega course of stock market. I'm Joseph Jose and let's get started. We can see price changes every day. Actually, price changes in every second. For understanding this, we have to learn the functioning of supply and demand. In the case of the supermarket, a total of 15,000 shares are held by various investors. If the stock has higher demand at a particular time, that is, Varma's supermarket business is booming, it's generating good revenue and profits, it's fundamentally strong and growing strongly, a demand is created in the market. We know that there is only 15,000 stock available for trade. But what if 1 lakh people wants the stock? The result will be an increase in price. We know that generally when demand of a product increases, its price increases. If the performance of the business is bad, demand will fall. Everybody wants to sell their stock, so owners of the stock will sell off their stock for a lower price. And this is how price of a stock increase and decrease. Here a common question arises. Is the valuation and performance of business the only reason for the price determination of a stock? The answer is no. There are mainly two reasons which determines the price of a stock. One is absolutely the performance of the company and other one is market sentiments, that is sentiments of the people. For an example, assume Varma's supermarket branches are mainly located in Punjab. So a news broke out that Reliance Fresh is going to start supermarkets all across Punjab and pumping a capital of 2,000 crores for marketing. So investors will think like, if a company like Reliance penetrates their business in Punjab, that will affect Varma's business, valuation and sales. That is, anxiety is generated in people's mind. So when fear kicks in, people will start selling their shares and will decrease the price of individual shares. To explain how sentiments affects positively, let's take an example that a news broke out that Varma and his team visited Delhi, Mumbai, Bangalore and gave advance for buildings in multiple locations. After hearing all these news, investors and general public will have a notion that this supermarket will grow in future. So demand of the stock increases and therefore price also increases. So the original question was why price fluctuates in each second. The ticker you can see price changes to red and green. For an example, price of Reliance was around 2,340 and 2,335 rupees. This price what you see on the ticker is LTP, last traded price. To understand this, you should understand the magnitude of Indian stock market. That is, crores of investors are present in the market, and for big companies in each second an investor will be selling and another investor will be buying that share. So for which amount of stock was sold at that time at that price is called LTP. Transaction occurs when stock market is open, that is what you can see on the screen, that is LTP. Hope you understand why price fluctuates. By this we are ending the tale of investors. A lot of companies are there and investors can either buy shares directly from company during IPO or from other investors who is ready to sell and vice versa. So in the beginning of stock market, we told a story of a building. So that building which facilitate this process is called stock market. That's all for today. Thank you for watching. See you soon. Goodbye.